Hello guys, today I'm going to explain to you guys what strategy I trade. I mainly use it on forex. I'll explain the pairs in a second. So first off, let's look at what time zones I trade in. Okay, time zones, I assume you guys understand what that means. I trade during the London kill zone and the New York kill zone. Okay, that's when there's a lot of volatility usually in the markets, so it's best to take a trade then. My time zones are on New York on my charts. Let me find the hours and show you guys. So it's from New York time 2 to 5. That's the London kill zone. Okay, and then the New York kill zone is from 7 to 9. So I just marked out these lines. In between these times, I will be looking for a trade. Okay, that's when I will be looking for a trade. Okay, that's not hard to understand. Let me zoom out a little bit. Okay, what are my time frames that I use? I use the 12-hour, the 1 hour, and the 5-minute time frame. The 12-hour you're gonna have to pay for. Like up here, you go up to your account and you explore plans, and then just the cheapest one will work. I assume you already have it to backtest, but maybe you don't have it. But yeah, if you want the 12-hour time frame, you will need a subscription on TradingView. Okay, right, so let's get into the concepts that I use. I mainly use market structure shifts and liquidity sweeps for my trading, right? So what is a market structure shift? Let me give you an example. Just look on the charts randomly. Let's try and find one. Okay, right here. You can see the body of the candle broke below this. That's a market structure shift. It's that simple, to be honest. One thing you need to remember is that you always want the body to be below the wick or the low that's being broken, or the high. It's the same thing. This is an example of a low being broken. Let me show an example of a high right here. For example, you see the body is above the wick, breaks above, and then you can expect further continuation of where it broke. So if it breaks up, you can expect it to continue high. If it breaks below, you can expect it to continue going down. Okay, it's a pretty simple concept. I would recommend you to look into these things if you don't understand them, though, to be honest. But yeah, secondly, liquidity sweeps. Okay, I feel like if you don't use any concept that has to do with liquidity, you will just become the liquidity. That's my opinion, because price just seeks for liquidity and then rebalances. That's something I've noticed, so keep an eye on that when you're studying the charts. Okay, let me show an example of one of the liquidity sweeps that I would mainly use. Right here, you see this low, swept this low. After this candle, I don't have a bias right now, I'm just going on the charts, right? Say my bias was bullish today, I would expect price to go up here, okay, if I see the sweep. Now, what are fractals? In case you don't know, they're these triangles on the screen right now. They are basically swing highs and swing lows, and that's where you can expect a reversal. Okay, now if you see something break above this high, if you see a break above it, it makes it more probable. Okay, I trade with probabilities. I don't really have like a whole type of like set rules that I want to just get ticked. I will weigh my confluences. Okay, I will look at everything, the market conditions, what's going on with price, and just all of that, and just weigh it in and see if it's worth the risk. If it's not worth the risk, I won't take it. Okay, because A plus is the best type of setup to take, else you're just wasting time, to be honest, in my opinion, if you can't focus on A plus setups, which isn't easy. I still take the wrong setup sometimes, but yeah. Now let's go to the fair value gaps. Okay, it's a really simple concept. They're just these big gaps. Okay, you see 3 candles here. This is actually a bad example. You can call that a liquidity void as well. Let me just find a easier one. Okay. This is a fair value gap, for example. Okay, there you go. Really simple. What do you use these for? You can look for entries in them, but you can also look for reversals in them, or a continuation or retracement. It's how you like it, basically, but I look for everything in it, to be honest. If I see a fair value gap, let's go on the we are on the 12 hour. Okay, if I see a big fair value gap somewhere like here, and I see price has come down to this low, okay, I wouldn't really want to trade the day after. I would want to see if price will go for the fair value gaps, sorry, and if it doesn't, then I could expect something. But mostly I don't like trading at the lows or the highs of the 12 hour. So if price is at the low of a 12H candle, I will not want to enter for any sells here, for example, as you can see. So yeah, that's one thing. Now let's just go to a different fair value gap. Let's see if I can give you guys a prime example of it actually working nicely. There you go, there's one already. Okay, so say you're bullish today, you want to see price go up, right? That's what it means. So you see this fair value gap for buys, I want to see price retrace into it. Okay, so on this candle, it went into the fair value gap after it created it here. Okay, so then if that's what you expect, right, if your bias is bullish and you say you want a retracement into a fair value gap, you can just look for entries here. Okay, you can go to the 5M and look for entries. Okay, so I mainly focus on the 12 hour, 1 hour and 5M, I said. But what do I focus on? Let me show you that. Okay, so basically the same concept: liquidity sweeps, market structure shifts, and that's pretty much it, to be honest. So I would go to the 12 hour. If my bias is bullish, I will look for buys. Then I would just drop down to the 1 hour, see what the structure is like on the 1 hour. Okay, if it is not bullish and the 12 hour is bullish, I will not want to buy because it's not aligning. Okay, that makes a low probability, right? So I would not trade in that moment. But if it's aligning, I want to see the candle close bullish, okay, for buys. So say I'm looking for buys, right, and my candle closes bullish, like you can see here. Okay, that's where I will look for entries. Okay, if it closes bearish, or it looks like it's going to close bearish, don't take it. Okay, now one main thing you need to do is wait for the 1 hour closes. This has saved me a lot of losses. I'll show you on dollar in a second, but the 1 hour waiting for the closes will save you a ton of losses if you do it correctly. Okay, now what have I mentioned so far? Let's go back up. Mentioned everything here but DXY. Okay, now DXY plays a major factor in the strat. I'm basically trading EU and GU only personally, and I use EJ as well to just see which pair is stronger or weaker, because then you can based off that you can choose what pair is better to trade, right? So if this is bullish and I want to sell, GU is obviously going to sell off easier than EU, right? So we'll be able to catch more pips. Anyway, not the main focus. Let's go to DXY. So DXY, right? One thing I just said earlier was the 1 hour closes. Okay, so if I see, for example, a 1 hour sweep against what I want to trade, I will never take the trade. Okay, I will never ever trade against a sweep on DXY that is against my trade. Okay, if you want to buy on EU and there's a sweep of a low, which means DXY goes up and EU goes down, for example, I will never take the trade. Okay, if you do that, you will avoid a ton of losses. Okay, I know it's a bit of a hard one for some people because people like to just rush into the market. But this is a patience game, okay? You don't just want to enter stupid trades and just be in the market to be in it and be able to tweet some bullshit profits, right? So yeah, that's one thing you need to have, is a lot of patience with this strat, and make sure you use DXY like I just mentioned, okay? Now let me give you an example. Let me show you a trade I took, okay? I'm gonna have to go back a little. There's a lot of stuff on my screen. Let me go to GU. Actually, I had a little clean sell like a few days ago. I think it was like, was it a Friday? I think it was a Thursday here. Yeah, right here. Okay, so as you can see, the 12-hour closed bearish, right? Okay, bearish close. That's mainly why I base my bias off just the candle close, and if it's gone to a low or not. If it swept a low, as you can see, it also swept this high, which makes it more probable. Sorry. So yeah, then I would go down to the 1 hour. Obviously want DXY to be in line, right? But whatever, that's something you should understand as well by now. You can see that the 1 hour swept the high here as well. So what would I look for now on the M5? We haven't gone to the M5 yet, right? I will go and look for a break, okay? This is a classic setup on these trades. Let me find a flip in there real quick. Okay, there we go, right? We saw that sweep on the 1 hour, right? So what will I look for is a recent break, okay? I waited, I still remember this. I waited for a break below this, right? I see this candle broke right below it, like just about. So I just entered. I put my stop loss up here, entered, and it ran for about what? Well, almost 5R, which is a lot. I did not take 5R, I'll be honest. I took like almost 2 because there was news like 40 minutes after the trade, so I didn't want to be in. But one thing you need to know as well is that when you take a trade, you want to mark out a zone, okay? This zone contains your sweep and your break, okay? So I will put a box here, for example. This is the sweep, excuse me. The sweep on the 1 hour. And then I will drag the box down to my break, okay? And that's the zone I will enter off. You can enter here, here, whatever. I personally always just enter here and put my stop loss at the end of it. But yeah, you can do whatever you want with it, adjust it. And that's the way you enter, okay? You don't need to enter off the M5. You can enter off the 1 hour. You can take 12H trades if that's what you prefer. There's also M5 setups you can take, like you see a sweep of this high swept this high, and then there's a break below as well. So this is also a M5 setup, which I didn't take. I took it off the 1 hour and 5 minute. But yeah, that's kind of it, to be honest. You just gotta weigh in the confluence, make sure everything aligns, and just keep it simple. To be honest, I don't think this strat was hard to understand, to be honest. It's not a lot, it's pretty simple. Just the main thing with this strategy is patience, man. If you have patience, then it should pay well. And yeah, that's kind of it for the strategy. Sorry, I'm so bad at saying that word. But yeah, I hope you guys learned something from this, and speak to you soon.